Yes, because we had overweights or equal weights to all those names, and we said that given where we are right now in the cycle, we're seeing that these companies are actually, it's a crowded trade. Everybody owns it, so there's going to be less upside in the short term. This is a tactical trade, and so we're seeing less upside on the short term, but we can redeploy that now into those other names.
Okay. Shannon, you want to take that on? What do you think about Degas's moves here in the overall conversation? Pete doesn't want any part of it. You see him waving his hands? He doesn't even want any part of it. I saw that, Pete. You got to remember the camera's always on you, pal. Shannon, go ahead.
So we actually trimmed Microsoft and Apple, but we did it in November. And we did it ahead of what we felt was going to be a post-election, pre-infrastructure plan bump in cyclical exposure. And so at this juncture, I don't know that I would be running to necessarily trim some of these names that are clearly going to benefit from an uptick in spend, both on the consumer side as well as on the business side through enterprise spending on IT. I actually think that if you're not equal weight to the market, or you don't have positions in some of these large cap tech names, and I'm not just talking about the FANGs, I'm including names like Cisco and IBM. There are areas of technology that are not high flying, that are not trading at multiples, that require significant multiple expansion over the course of the next 3 or 4 quarters to justify their price. And so I would actually be adding to some of those positions over the next couple of months if you don't have weightings, because I do believe that we're going to go into a period where a barbell between cyclical names that are going to continue to be positively correlated with economic growth, along with, this business and consumer spending increase, which we're going to continue to see, is the right way to position your portfolio. Some of these high-flying names, Scott, to your earlier question, absolutely, they'll be around in 5 to 10 years. But there's going to be consolidation, there's going to be some acquisitions, and there are going to be some players that have some missteps in some of these high-flying names. And right now, for us, the prices are just still a little bit too high, even with the pullbacks that we've seen.
Liz, I'm wondering, given all this concern about where rates are, and I think the 10 years we showed at the very top of the show had dropped back down to 163 or thereabouts. You think the market has overdone this whole worry fest over inflation? I flagged your tweet the other day as our jump-off point because I thought it really just hit the mark. And it sums everything up. Fed still believes it's transitory. Speaking of inflation, the market seems to think otherwise. I loved the tweet earlier that I saw from my buddy Carl Quintanilla, who says, lumber down 4 straight sessions, copper on pace for worst week since April, retail sales miss. Tell me again about the overheating. So is it much ado about not that much?
This week, I think it was overdone, yes, because what we're looking at is last year was the year of market momentum. This year is the year of economic momentum. Market momentum always leads economic momentum. When you have economic momentum, inflation should be a part of that. I would argue that if inflation wasn't a part of that, something was broken. So this is what the readings should look like. But I also agree with Carl's tweet. That's why we overdid it earlier in the week, that not all the data is showing that inflation is here and here to stay. It is still possible that it's transitory, and we have to wait until later in the year to really find that out. I don't think anybody is arguing that inflation is here, is coming. I think the real question is, what will the Fed do about it? And I don't know why there's so many people that are eager to not believe Jerome Powell and not believe what he's saying, that he'll wait. I think that if we put the Fed up against a wall and said, which mistake would you rather make? Would you rather be too early or too late? I think they'd rather be too late. So I don't think there's a huge risk of the reaction function from monetary policy officials causing us a problem.
Well, they said as much.